Hey guys, what's up? This is the first video review here on Keither.net. I don't know how it's going to go. I'm just going to wing it and see how it goes. And hopefully I'll get better over time. So without delaying too much, let's jump into the market today. So this is the ES Mini 500. It's a 2000 tick chart. All of today, September 8th, 2014. And the first thing I see just looking at it is there's a lot of wavy action, which is good as long as it is trending. Waves do not mean trending. They can go sideways, they can go in a channel formation. We want trending where it's lower lows, higher highs, whichever direction the market's going. So the first thing I notice here is that uh, at the open, it went up. It kind of flagged upward, even though there was nothing previous that we can see. But let's go ahead and scroll back and see what happened. So from yesterday, it was going up, up, up into the close. And then overnight, it pretty much dropped down and went sideways. So that's actually a good sign because we went up, we broke the highs up here, the higher high or the lower high right here. We broke that overnight. And then at the open, we kind of flagged back up, which is a sign that we're going to go lower after we did that right there. So we did break down. Now that's not really something you can play unless you want to be more aggressive. So I shouldn't say you can't play, but if you want to be more aggressive, you can. Because you could notice that this is flagging and then just the lows when it breaks down. Because it opened here. If it breaks past these lows, you could take the trade. Now, you would have been successful right there. So the trade would have looked like anything under 2003.50. So 2003.25 you would get in, and you would not have seen any up candles until 2001. So that's 3.5 points right there, almost 3.25 points that you could have had. And then it pulled back a little bit and it fell even further. Now right here it has this beautiful doji candle right here. I mean, it's perfect. It comes down, the doji peaks down or pokes down below everything else, and then the next candle should have a little more decisiveness to it, but still it broke back up. So it came up, it hit the 21 EMA, and we got this other doji right here. It's more like a hangman candle, and then we continued higher. But the thing to look at here is look at all this congestion. We're not moving. Like if you look over here, when we broke down, we moved one, two, three, four candles that were just all perfect laid out one after another. And then we came back. And look, this isn't a great example, but one, two, three, these three candles here, you can see that they're moving down. And then here, they're moving up. These are a little congested, but still not like this. Look at this over here. They're short, they're overlapping, they're almost sideways. There's just a slight upward action. Now that tells me right there that we need to be looking for short because that move is not very forceful. So what I would do is I'd say, okay, in the morning here at the open, we flagged upward. So now we got this going on. I would have drew this trend line here and just waited and see if it would break down. So again, we would actually take this play. One, it's exactly what happened right here. We want to go below the lower highs. So this right here, we touched the 21 EMA, and it's a lower high right here. So we would take anything under that, 2002.25. So 2002, we would have taken a short. Now, when we broke that, we came down here and we kind of went sideways. So we could have got at the most 90, 2000 even, 2000 even. So you still would have had 2 points right there from this point down to here. Now here's where our strategy finally comes into play for the day. Our strategy, or my strategy, is to play pullbacks to the 21 EMA. So this is kind of sideways, kind of wavy, but you could have played it, as I said. But here, when it finally broke down this lower high and it went sideways, it came back up and it tried to push higher. But finally, it stopped at the 21 EMA. As you can see, the majority of the candles, the bodies are stuck below the 21 EMA right here. Whereas over here, they kind of broke through and kind of played around it. Same here, they played around the 21 EMA. Finally, we saw here they came up and they got stuck. So this is our first perfect entry of the day, and this is where I'd be really confident taking my opportunity. And if we would have done that, we would have came up here, it went sideways. This first breakdown candle would have been my setup bar here because it went sideways. So this one broke down. So anything below this candle right here, I'm looking to go short. Let's zoom back in here. So anything below this right here, I'm looking to go short. And the next candle actually took us in. So we would have been in at 2000 even. Now it went sideways here, which isn't ideal, but we only went back up to 2075. So you're only risking 3 ticks at that point. And then guess what? The move continued. It broke down big time. So if we got in at the break of this 2000 even, it pretty much after this little sputter right here came all the way down to 1996.25. So that's 3 3/4 points right there on that one move right there. And how long did it take? Let's see here. It went from 12:06 until 12:20. So 14 minutes, and you could have made 3 3/4 points. Not a bad shot. Not a bad shot. Now, if you want to stay in this, that's great. My main goal is either 1 point, or if it's really, really moving, I will stay in for more. But if you wanted to stay in here, it only came back against us. It came back against us 2 points right here on this little rebound. But it did not touch the 21 EMA, so I'm not taking another short, even though we could have. Because as you see, it came back down, and it tried again, and then it came back down. So at this point, we're kind of sitting and waiting and seeing. Now, one thing here is you can see this double bottom here. It's more of like a tweezer bottom. This one came down, and it hit this point right here. And then this one was kind of in the middle, and then this one came down and hit it again. Now, I try to keep my trading simple. I'm just going by the 21 EMA pullbacks. But these kind of bottoming patterns right here are strong. You know, we've made this big run down. When you see this kind of sideways action and double bottoms and tweezers, you need to be aware that the market probably wants to make a change in direction. And another thing here, you see I do have this stochastics on here. I do not use this as any primary signal because I've used it in the past and it's not that accurate. I mean, you'll find spots where it shows that it's moving up and the stock goes down. So do not use that as a primary indicator, but I do use it as kind of a signal. So as I said, we have this bottoming right here, but also look at our stochastics. It's been down, 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 oversold. And then all of a sudden we break back up. And just as we do, guess what? The market does follow. So we have this first leg here, and then we come down, and guess what? We see another double bottom tweezer pattern. And what's good about this one is we have these 2 matching candles here. This big red candle right here looks pretty powerful, and it has a bottom wick. You know, it's a big candle. But look what comes right after it. An up candle with almost the same body. It's the exact same height from here down to here. They're the exact same height. Now, this is a reversal signal because I think they call it a twin tower pattern because one candle matches the other, and that shows that this wanted to go down, but then we reversed it completely right here to send it back up. So I'm looking to go long here, and of course it is in the 21 EMA at this pullback. So again, this is a spot where I would really, really be taking a shot. Second very strong pattern trade right here. So we pulled back the 20 EMA. First thing, I'm looking for a signal bar that's anything above this. So anything above 97.50, 97.50. So we get it right here on this bar. We get 97.75. Now I'm looking for anything above this to show that we have strength in this move. Anything above 98.25, and guess what? The very next bar we get 98.50. So I would be in at 98.50, and as you can see, it does go up. Now this is a lot of overlapping right here. and it's not the best. There's some sideways action, but you also need to keep in mind that the end of the day is right here. So this trade would be taken with caution, but still with this pattern right here, I would be willing to take a shot at it. And as I was saying, 98.50, you could have held this all the way up to 2001.75, it looks like. 2001.75 and a start of 98.50, 98. So what is that? 3 points? Another 3-point trade potential right there. And then at the end of the day, it kind of sputtered off. So that's it right there. We had 2 ideal setups for our strategy. One right here and one around here. We had 3 trades that were not part of our strategy, but I would not mind taking them in the flag here because this is a clear, it's struggling to go up and then it breaks down. That's pretty beautiful right there. And then it does it again. Whenever a pattern repeats like that and it looks like it's going to repeat, you need to be paying attention because it did it here and then it slowly grinded back up and guess what? It broke down right there. So that's 1, 2, and the bottom pattern. Three patterns that you could have taken and 2 ideal setups for my strategy that I'm trying to teach here. And both of the trades that fit the strategy, as we said, they're huge moves. 2,000 down to 94 if you held it. So I mean that's 6, and if you would have got down at the first leg, it's more around 96.50. And then as we said here, we got in around 98.50 and we could have went up to 2001.75. So plenty of opportunity to take points out of the market. Those 2 ideal trades, you could have had 5+ points depending on how many contracts you're trading. That's a nice day right there just from 2 trades. And then you also have the other trades that were not the strategy but you could have taken. That pretty much does it, but I do want to show you one other thing. I always trade with a tick chart, a 2000 tick chart, and I also have a regular price action chart. I don't use it as much, but I keep it up as just kind of a reference. And what I wanted to show here, let me get rid of this here and here. Something kind of interesting that happened. Last night, I was watching the market right here. It peaked up into the close and right after the close. And then when it opened Sunday night, it broke down and then it came up and then it kind of drifted back down and then it came up. So probably around this time, around 10:30, 11 p.m., I drew this trend line here thinking that eventually it was going to break up above that. It's flagging out it's going to break to the upside. Now, it did do that a little bit here, and it did do it here, but it was mostly just sideways action. You can't really play that. Now what's interesting is if we scroll into today, now that we've seen today, here's our line. Let's zoom in a little bit. Something interesting right here. If we draw a trend line from here down to here, we activate that. We move this down over here. Look at that. It's not perfect, but look how close that is from this middle line all the way down to where the low candle of the day was. Now it didn't go from here all the way down to here and here all the way down to here, but these are kind of like measured moves. You can tell. It's kind of funny how I drew this trend line in here last night before the market even opened, and the trades today pretty much played around that top or bottom, right in the middle. This is pretty much the median of the action today. We were up, we came back to it, we were up, we came back to it, and then we broke below it, and guess what? We came back up to it. And if you look, we even had some sideways action here that stopped at this. Then we broke above it, and then we came back to it. So that's just kind of something interesting that you can look for, and you can draw those trend lines in your own charts, and a lot of times you'll notice this kind of stuff happening. The trends do follow through overnight. They do follow all day. They do follow on all timelines. And not so much over a tick chart because the data is different, but you can still see the same formations over and over. All right, guys, that's it. I'm going to cut this off. It's been about 15 minutes, it looks like. I probably talked too long, and it's probably not the best video, but I'm hoping after doing these daily I'm going to be able to offer you more insight into what I'm looking for and hopefully make you guys better traders. So come back tomorrow for another video. I'm going to be doing these daily, and good luck in trading.